All right. Welcome, everybody, to another Pepperstone live event here for a very interesting day because, of course, yes, it is Nvidia Day at this time of recording, possibly the most important stock that really is in all of their earnings calendar. And I think it's going to bring a bit of volatility to markets. And, of course, we've got some of our favorite trades moving forward in today's show. As always, we'll be covering everything from the S&P 500 all the way through to gold, currencies, and, of course, commodities and cryptos. My name's Thomas Atkinson, and as always, I'm joined by Tyrone Abella. Tyrone, Nvidia Day, what do you think? Good day to be
Very,
trading or a good day to be looking for volatility afterwards?
Yeah, I think looking after the volatility afterwards, I reckon will be the play for the day. But welcome, everybody, and thank you for joining us. Yeah, we are seeing some action. And I know I've had some special requests, Tom, that I'm going to pass on to you a little bit later on. But GameStop, people want to know about GameStop. So I told them that you're going to cover that tonight because I know that's your favorite stock and you're invested very heavily into it. So let's jump into
Yes, sure. My favorite stock of all time, guys. Yeah, right. I like that stock. Yeah. Anyway, without further ado, we've got a quick risk disclaimer, and we'll see you in just a few moments, guys. Let's check this one up. Okay, well, we'll kick things off with the US 500 to get started before we go through currencies, gold, and everything else. But I guess I did also want to encourage people, if you have questions, if you have comments, we do read the comments after if you're watching it live. Or, of course, if you have questions during the show, please do feel free to ask them. There's no stupid questions. If you have a question, thousands of other people have the same one. So we always love to answer those. Another thing that's really great as well is we answer them at the during and at the end. So yeah, post it up. Give it a thumbs up as well if you enjoy the content. So Ty, we'll start here with the US 500 and a very important day. As we mentioned, it was Nvidia Day today, which means that we need to be on all attention in terms of the VIX and everything. Basically, actually, if you're not familiar with it, the VIX or volatility index has dropped to a drastic low. So it's kind of like the calm before the storm, as I see it. I actually had marked out this little low down here, Ty, and I mentioned it today to a few people, and I was like, wow. So we're coming into, probably one of the more volatile event days in terms of just the possibilities of maybe Nvidia not living up to forward projections. And if it doesn't, you could see this really spike quite heavily. And of course, some people see this as when there's no fear, I should be looking at potentially fear coming in. I just looked at it as an extremely low level while we're at, relatively speaking, extreme highs. So let's start with this US 500, 53.25, the resistance that can't be stopped. So far, we've seen a slight melt up. So we've got a couple of wicks up here on the all-important daily, but we still continue to make a series of higher highs and higher lows. For the audience, I guess the way I feel about it, and then we'll go through your ideas, Ty, 53.25, if we get through around 53.30, 53.40 today and hold the close, so we stick the close, I feel like we're pushing towards that magical 5,400 level. But the key will be if we reject this zone, because I think, while we're making a series of higher highs and higher lows, it's hard to debate this is in a bullish trend. But what happens if we go below 52.80 today? Has that begun kind of a double or triple top pattern that then pushes down to the 5,200 zone where we were only a week ago? And we might find a lot of confluence there. We'll discuss. Ty, well, what are your thoughts on here on the S&P?
Yeah, I think it's at a crucial level. There's no question about that.
Mm-hmm.
I mean, I do like what I see in terms of it creeping up really, really slowly, because quite often when that happens, we do get that move. It's kind of coiling at this level. I think there's a lot of uncertainty in the market. I think Nvidia needs to get out of the way. We need that gone in the rear view mirror so we can actually focus on a trend. Look, we shouldn't be waiting for Nvidia, Tom, for the S&P 500, right? We shouldn't be, but we are. And and I think that the market is.
That's 2024.
I know, right? I know. It's crazy, but I think you got to trade what you see. And look, the market wants to push up higher. I don't want to be the first person to this party, that's for sure. But if it does push up higher and comes back and tests the 52.80 from above and finds a bit of support there, a bit of consolidation, then we're gonna have to start believing the story that look, maybe if we are pushing on to the 5,400 or probably even more magical than your 54 is the 55. I think that those sorts of levels are attainable, but probably with a little bit of a pullback first. I just can't see it sort of grinding up there without some sort of a pullback to at least. I love the 52.50, the 52.80 zone. That whole zone to me is a very nice reload zone if we get a pullback to it. But got a little bit to play out. I'm happy to watch it. We shouldn't be brought down by Nvidia, and we shouldn't be going up because of Nvidia, but we probably will.
Look, it's AI, Ty. It's the revolution. So let's go through the key main levels for day traders. I think that the big zones are going to be 53.25, 53.30, close above.
Yep.
Melt up pretty much continues. Market comes down to something around 52.80. This is the first, let's call it first bull frame area. I also think 52.50, which Tyrone mentioned. This is a little bit of an order kind of area. And this is a zone of demand. And then, of course, the major one, which sits around 5,200. Also, I can tell you is an options level and does tend to have a few other things stacked on top of it. So you'll notice I've got some squiggly lines that are poking down here. But if I move these squiggly lines, which are actually anchored VWAPs, and I pop them more into the lows, what you're going to notice is as you're tracking behind a few of these markets, in particular the most recent lows, they're going to start correlating a lot with 5,200. So basically, we have a very good confluence stack here. We have a little bit here and a little bit here. So I think these are the main three levels for bulls to be watching. And for bears, you're going to be really in tune with how it reacts with this first level. I always say that you need to see, and so do you, Ty, what we call the lightning bolt or a change of trend, which basically means making a new low from this current uptrend to really solidify a short. But some people, I could see why some people are trying to angle in around here. So with US 500 at these highs, what does that mean for the rest of the market? Well, let's go over to the NASDAQ. It's a very similar trend, a very similar scenario. I've already loaded up a couple of key confluence techniques. And what you'll notice again is we're making a higher high. So we're still in an upward trend. There's no doubt about that. But if we do go underneath this level, and I'll just read it out to everyone, it's 18,450, then I could see that the market would actually push further down and we could be very quickly at something like an 18,000, 18,200. And this kind of just keeps repeating itself no matter what major indices we're looking at, doesn't it, Ty? That we're extended with many indications. And that's basically a very strong trend up, very strong V-shaped reversal. But at the same time, I'm looking at indicator on indicator on indicator showing us that we're a little extended. And what that tells me is if Nvidia can't live up to expectations, especially forward guidance, it could be used as a catalyst to sell this market off. I already think it is a little extended here.
Yeah, and I think the market is looking for that reason. I don't know that market participants are expecting or confidently trading the long positions. I think everybody's probably waiting for the short, to be honest. And that's why I think the market's moving forward with a great deal of trepidation. But yeah, that said, yeah, that can change very, very quickly on guidance of, future, explosions in Nvidia, which will obviously send, shockwaves through all of the other stocks that will drive the market higher. So, I mean, realistically, I think it's a very watch and see kind of environment at the moment. I think I'd be trading very, very carefully right now. Not the best place to be putting a long-term long position, I wouldn't have thought, Tom.
Yeah, so there were some good stats around all-time highs, but that's only really for more of a position-based trader that is willing to wear, significant downturns, Ty. And I think the thing is that, we don't have structure. So why, like as a trader that's trying to get risk reward, as a swing trader or even investor, you still want to get that structure so you can kind of go directly into ideally profit and move. We're just not seeing that. So let's move on to some other pairs. Of course, we've got gold coming up. I see a few people in the chat. I do want to shout out as well some people that are joining us here live. We've got Wollongabba always joining us. Michelle, Jamil, Huge Nad, I think it is. Grace. And then we've got Ike, Jordan, Jay, and a few others as well. So thank you very much for Winter, etc., and Roman in the chat. So thank you very much. Ask questions, guys, and we will answer them. So let's go over to the US dollar. This one kind of nailed exactly our thought process. We ended up having, I think last week, what was it? And so we do this every Wednesday. Make sure to sub. So yeah, we were finding ourselves here. So basically, I think we saw this candle leading into this particular day here. And we obviously already targeted this most traded level as a possible short. This then happened, which is an incredibly negative candle. And it pushed directly into kind of what we would expect, which is the 104 level. So I would say for shorts, at least temporary shorts, that's an incredibly good take profit zone. Now we're starting to just kind of dial it up here. And I think there's some lessons here, Ty, that we can all learn as traders and investors about, candle formation. So I thought I'd dive in on this one. You'll notice here, guys, that this is what we call a shooting star or a rejection pin or something like that. That's the many names for the same thing. And basically, it's in the direction of trend. So, of course, it looks incredibly negative. A little bit of a tip, if you're ever going to trade this, and this is on the daily time frame, you really should be looking for a new lower low to be formed, because that shows you that at least there's momentum continuing in the next session in that direction of trend. And that just didn't happen here. So what's been occurring instead is it's been slowly pushing up. And I could see a lot of people having stop losses behind here, Ty, and I could easily see this market at least pushing, maybe hitting the 20 moving average, hitting that 105 level, previous support becoming resistance. We'll look at the smaller time frame in a second, and then rejecting. Very important lesson to learn, which is to let the market just that little bit of extra follow through, isn't it?
Yeah, most definitely. Look, according to our rules on how we trade that particular candle, there's no way that you'd actually get involved until it did make at least price action underneath that candle, which it did not do. And I think you're right. A lot of people are probably looking at shorting it with stop losses. Well, they'd have to be at probably the 104.80, Tom, would be the level. I reckon that would be the one that's going to catch most people off guard. And I reckon I think it's a real possibility that this is going to be above 105, 105.20. I think that's probably the real level that I would be looking out for. If your stop losses are 104.80, I think they're way too tight, and I reckon you're just asking for trouble. I would be looking at quite a bit higher because really 105 is the area that I would expect it would probably find resistance. So I think that's really you've got to be very careful. Sometimes people get a little bit too cute in where they want to put their stop losses, and I think that, and by that I mean it's a little bit too close to the trade itself, rather than putting it in the correct area. They're trying to capitalize on a bigger contract size, so maybe sticking with the parameters of maybe their risk, but putting the trade in jeopardy because you're going too close to increase and get a decent lot size. So I think you got to be very careful about that. But why don't we, once we're done with the dollar index, I think we'll jump into the euro, because I think that's the one that people really love to trade as the inverse of this anyway. But we'll go straight to it. Look, it hit a very heavy level of resistance. There's no question about that. Like we know that level is very heavy. And I think we were talking about it last week, Tom, that it was a good chance it was going to get up there, but it was also a good chance that it was going to pull up stumps. In my mind, I think it's got a little bit more to go. And I think this is probably a clue for the dollar index as well, that, even if the euro turned around here and started to move up, that would be an extraordinarily shallow pullback in the grand scheme of what it's been doing. So I would probably more than likely expect that it's probably at the very least it's going to get to the 20 moving average. And for that to happen, you're going to see at least a 105 or a 105.20 on the dollar index.
Yeah, so the 20 moving average, one of the things that I always like, obviously a very heavily used moving average. We've got a great question about anchored VWAP as well, which I'll answer in a moment using this chart. So with the 20 moving average, what I always look for, guys, is to make sure it's respected it a bit recently. You can see over here it was doing some respect. There was a breakthrough. It came back and hit it. It found a bounce. It came back and hit it, found a little bounce, died, went underneath, broke. Here it didn't respect it. Here it really respected it. So that's recent. So, of course, recency is good. And then here it respected as well. So I'd say on average, it is paying at least some attention to it, at least enough statistical advantage to have a look at that zone. So the 108 is a key point. And that would be, of course, a more deeper pullback. So some things that you can start to correct or start to add onto this chart would be a low to a high swing fib. That's how you draw it, by the way. Low wick to high wick. A lot of people ask me that question. And, get to 61.8 right around that zone. You could do some volume profile work. And the question from the chat is, what do you think about anchored VWAP and where do you use it? So, of course, there's a lot of intricacies to anchored VWAP discussion. But I like to use it in behind lows, behind major swings in particular. So you can pop it behind swings like down here. And like any indicator, what you're doing is you're building a confluence story. So I generally put it behind lows, and a little bit of a tip, I tend to put it around big kind of volume areas. And the chat here actually is from Jordan. He says, hey fellas, can you tell us about the best location to place anchored VWAPs? Highs, lows, high volume, or somewhere else? So one of the things I'll give you a little bit of hint of is news. So in particular, placing your VWAPs on the news candles. Let's say you have every month we have what we call non-farm payrolls. Now, non-farm payrolls is the explosive event that affects the euro and affects currencies in particular a lot. And what ends up happening is you get these big moves sometimes. Now, placing an anchored VWAP on that particular candle that creates that big move, that daily or that particular big impulse move from that point, I do find that the pullback to that particular one tends to be pretty good. So you could certainly add that into your arsenal and start to build it through. What you'll notice is after this low down here, we end up getting a very similar read to the 20 moving average. So what that's telling you is that there's an anchored VWAP here, which is probably one of the most noticeable swings and also definitely the one with probably the most volume in it, because of course it sat there for the longest period. And that is correlating with that 20 moving average. So effectively, you've got another reason at that point. So you've got a 61.8, you've got a 108, you've got an anchored VWAP, and just behind it, you have a little bit of structural zone support. So really somewhere in here, if the market was to get down there, I think to Ty's point, that's where we would expect a buyer to be in that box zone, wouldn't we, Ty? And then what we would do as scalpers and day traders is we'd say, cool, we analyze this on the daily, highlight zone, set alert, jump on in. And when the alert comes in, then I can spend my time in front of the charts to try to find a trade in the bullish direction.
And that's why I think it's important to analyze, charts that are obviously reliant on each other. And, that what we've just done there on the euro will spell a 105 or a 105.20 at least on the dollar index. That's the only way that the euro can actually get to those lows. So it's always good to use charts that correlate well together. Mr. Bass says,
I know people are watching, man. There's more than you think.
There's a lot more than you think. I don't know. Yeah, YouTube is broken. I think we've broken it. We've got so many viewers tonight that we've broken YouTube, and that's okay because we've got about 30 people who have commented.
Right,
so we know there's more than 4 people watching. So don't worry.
Yeah,
don't worry, Mr. Bast. You're not the only one here.
All right. So here we have the wicks tie, and we've got this kind of procession down. You could argue that this is a flag formation, so keep that on the lookout as well. Basically, we have what we call long leg dojis. Effectively, if you place these 2 days together, there's a wick down low, wick up high, and bodies similar to each other. So that's actually technically an indecision candle as well. So if we do end up getting a bullish move, do remember this is the resistance we expect. Next stop for the market, 102.90 on the top end to 109.40. So I don't expect much. Like if it does end up pushing through here and the dollar starts falling off again, the US dollar, then I actually expect a fairly large move into here. And at the moment, the best pullback zone would be somewhere in here. So best pullback zone somewhere in here, best kind of level for it to go to would be up in that area. And as Ty said, it should correlate with that US dollar index as much as possible.
Yep, for sure. Jamil, the EMAs that we use are the 20 EMA, which is the red line, the 50 EMA, which is the blue line, and the 200 SMA, which is the 200. Okay, so they're the 3 that we use on all of our charts very consistently.
Yeah. All right, let's move over to, according to Brent, a sexy commodity in comparison to the one that he's got a question about, but that's all right. We'll check that out in a moment. And that's gold. So a lot of people loving gold. Obviously, on the show, if you've been watching for 2024 so far, I should wear a golden hat tie because I've been a massive gold bug. Silver as well, and we'll go through that in a moment. Now, I do love me some gold, but again, I'm seeing exhaustion runs. So what that basically means is we've had an epic run back up. Fantastic. Did we make a new high? Absolutely, we did. But I can see some consolidation here. You'll notice I've got a little red stop sign, and that's one of my own kind of little indicators. And what it's showing is it's just showing exhaustion. So you can see last time I got those little red stop signs and stars, it just showed that maybe the trend was going to have a little bit of a breather and then hopefully resume back into it. Now, at the moment, still a series of higher highs and higher lows. But I think, Ty, you're probably going to echo my sentiment. Amazing runs here for gold. I am still personally bullish on it over the next coming year and months, but I could see it take a little breather here. And the next demand doesn't really come back in until around 23.75. What are your thoughts, Ty?
Yeah, correct. Look, I'm seeing quite a bit of MACD, bearish divergence class A on the daily. So I'm on the lookout for the smaller time frames to actually start turning around a little bit. I wouldn't, just short it just for the sake of it. I think we need definitely technicals to, on the daily, yeah. So we've got the, you'll see that there's MACD bearish Class A. As you can see, we've got a higher peak with a lower peak on the MACD. No question about that. And it's all, look, gold's one of those things, isn't it? Look, it could go to 2,700 next week and no one will be surprised. But it is starting to show signs that it is getting a little bit tired, isn't it? Like it's starting to show those signs that it's starting
on the
to
small
tick
time
over
frame.
a little bit. Yeah, on the smaller time frame, it's looking a little bit tired. So I think that if we see a sequence of lower highs and lower lows on a significant time frame, like say a 4-hour or a 2-hour, I'd be more inclined to be thinking that probably either 23, probably anywhere between 23.50 and 23.75 would be the first target that I'd be going for. But a little bit deeper than that, and I think that still the 22.80 is probably the godlike zone that I think that you'd, if real bulls of gold would be looking at probably loading their positions up from that point if it gets back down there. Now, again, it's not an automatic buy there, but if we start to see a consolidation, which is exactly what happened last time when it got down to the 22.80 last time, you can see we had 4 or 5 decent days of action, and then it started to track on up again above the 20 moving average, and then off it went. I would be expecting that level to give us support again if we get down there, and that would be my expected move if we do get a sequence of lower highs and lower lows on something meaningful, right? Not a 15-minute chart. We're talking about anywhere probably upwards of a 2-hour or 4-hour.
So it's going to be inevitable that we get the question silver versus gold now, or is silver going better than gold? So in general, I would say yes. Basically, we've got a very strong rally from silver, and this is just what we call a ratio. So it's silver price versus gold price. And what this is telling you, and I've put this on the show before, but I think for a lot of new members and a lot of new viewers, they won't be aware of these combos. You can type in a thing, compare it to something else. Now, in this case, we know that silver's like crazy gold. Yeah, it goes like Ethereum to Bitcoin, and it gets a bit wild and goes a bit nuts. And in this case, it's been very behind gold's move. So gold, like Bitcoin, kind of rallies, and then silver didn't do anything. And then we start to see silver accelerate. And silver has actually been performing way better than gold in recent weeks. So it's something to look out for. And you'll notice it's still quite under some of the old ratios. So I think that silver still has some catching up to do. And when you go back through history and you look at this yourself on charts, you're going to see, a real difference there. So I think that silver is also a very interesting pair right now, Ty. But at the same time, just like gold, it's had that rally and it's in that exhaustion period, I would say, at this point in time. So look, when we load up, there it is.
Grace asks the question that she had a feeling, she had a gut feeling that gold was going above $30, breaking out, and were there any technicals? Well, Grace, I can tell you that Tom over the last few weeks has actually been cashing in his gold holdings and transferring them to silver at all the pawn shops around Victoria, because he was very, very strong on silver.
No, I don't like physical. We do the CFDs. Physical's annoying.
No. Tom has been very bullish silver, actually. The last few weeks, we have been talking it up. And there are technicals, most definitely. Look, we'll jump into silver. The only thing with silver, Grace, that we've got to be a little bit careful of is the way the contract sizes work. And that is a cautionary tale for everybody who does trade silver, that contract sizes aren't the norm. So it's not like trading gold. If you do go a standard position without knowing it, you could end up with a very, very, well, let's call it awkward position, Tom. We've seen it happen many times. One of the most common things that we actually get is, oh my God, what happened when someone traded silver and it moves like 1 point and they're down hundreds and hundreds of dollars when they expect it to only be down $1 or $2. So just if you are trading silver, just be very, very cautious.
Try your demo first, or talk to your Pepperstone advisor before.
Always very, very good advice to have a demo.
What the size is. One lot is not necessarily one lot.
No. Not even close. If you're trading something that you're not normally used to trading, having a side-by-side demo account with that platform is a really good idea, because it means that you won't get it wrong, and a lot of people try to get themselves out of it by hanging in there and saying, let's hope it turns around, those famous last words, Tom. And it can be an account breaker. So just be really, really careful there. But look, you know what? Silver has been great. And realistically, $30 break was not that big a surprise because there was a lot of momentum pushing up from that sort of $27 to $28 mark. The momentum was always going to push past that sort of $29.50, which was a barrier that we've been talking about. And once it did that, it was off and running. And look, the momentum doesn't even look like slowing at the moment, does it? Like, yeah, you look at gold and you say, well, it's looking a little bit exhaustive, but yeah, the chances are that this one, although it's starting to consolidate a little bit up at around that sort of 31.80-ish area, it still looks extraordinarily strong on the chart.
Yeah, I think on the higher time frames it does. Again, I think it will suffer from the same problem gold does. But let's just quickly go through the steps of why I think 30 was going to break. So firstly, we had many, many touches many moons ago. 2020, 2021, the famous silver squeeze that everyone was getting into back then. And it just kept failing at this $30 barrier at 29.50, 30. Now, this time around, it came up, it rejected, and then it created an inverse head and shoulders, you'll notice on the smaller time frames, which we discussed on the show many weeks ago. Then it rallied, and the rally point was 29.50. And what you'll notice around that rally is you end up getting a doji, and that doji shows indecision at that peak, and then the market breaks that high. Now, when the market breaks the high from the doji, considering the pullback, considering the 1, 2, 3 times we've tested it before, considering everything on the surface and the rising momentum and the strength of the volumes coming through in that particular pair, you can see here the volumes were high. That certainly led into, I think, making a educated decision that the momentum was on for the break. And I think Ty is getting excited about it as well as I am from the aspect of this is a significant level for silver. So when you go back through history and you really pull your data all the way back, you'll notice here on the charts, we haven't been at these levels for a very long time, 2012. So really, silver has, runway potential to the fours and everything else. And it's been sitting for a very long time. So there are also super inverse head and shoulders. So probably someone in the chat's already said it. Here's the super one. And guess what? The super one has a bit more length in it. So,
and look at that pull. Look at that pullback to the 20 moving average before it actually launched to break the 30, good and proper. Like, bless its little heart.
Yeah, it's pretty incredible. What time frame should we enter as a day trader? Well, generally speaking, Tyron and I like to do our analysis in weekly, daily, and 4-hour charts and 2-hour charts, and then you can analyze. And what you do is you block an area. So let's say I was looking at this, I might say 29.50 is an interesting zone. Maybe I've used some VWAP, I've used some fib, I've used some 20 moving average, and all these other things that I've created. Now, when I have that, I will then create a rectangular zone of interest. And basically what I would do is then I'd set an alert on the top of that interest. Okay. And then what you're looking for is generally, your 5-minute and your 15-minute chart confirmations. You can go lower, 3-minute. I don't really do much 1-minute action anymore, but it doesn't really matter on the time frame. Instead, what you're actually looking for is the structure of the market. So as it comes down, who cares about the time frame? You're generally looking at, has it found a buyer here? So most people, when they first start, is they buy the dip. So they see the dipping, it comes down to the price, and they go, yeah, that's right, I'm going to buy that. And then it keeps dipping and dipping and dipping. The better way to do it is, let's say you wanted to buy the dip. Okay, you could scale in. So let's say you're somebody that just can't handle it. You scale in a portion of your order. And then as it then moves back and it shows you your replicable system on the smaller time frames, you rescale the position. So that's a good way of looking at it, I think, and maybe a little bit different. Great question coming in here, Ty, from Brent. And it's about, gold might be sexy, but steel, could it be the next thing? So we won't go into the company that you've got there, but I think that, Brent, what we're seeing is an across-the-board metals increase. So basically, you've got your iron ore, you've got your gold, you've got silver, you've got zinc, you've got nickel, which is only just starting. You've of course got copper. And copper really is the linchpin to a lot of this discussion. So copper is considered, one of the most important metals, of course, in construction and infrastructure and government spend and all those types of things. And you'll notice since February, it's been on a massive run. Now, again, like all the metals right now, I think they're a little exhausted. You can see this wild action happening up here with all these stars and numbers. And again, that's just telling me that we're a little extended. But, again, the future does look like it's pushing. MACD's up, momentum's up, all of those types of things. So how do you look at steel? Maybe check out your iron ore futures. I think it's FE. And then you can have a look at how that's acting. And then but still is of course part of the construction industry. Okay, next one here. Jordan has some good reading experience here, Ty, for us. He says, I got caught out on silver like that. That was a learning experience. Well, there you go. So exactly, look, I've been caught by silver. That's why Ty's warning you about it, because it cost me about $300, that one. Back in the day, I remember I accidentally pressed it and it was a bit big for the account back then. And I was like, whoops, I had to close it pretty soon after. And Jordan also had that problem as well. Michelle says, can we look at oil? Certainly. It's on the next chart. So let's move over here to oil. And oil is a funny one because it's still at our major bull zone area, but it has changed a lot since last week. So Ty, do you want to walk us through oil? What are your thoughts on this one?
Yeah, oil is, look, it's finding itself. It's we can't emphasize enough how strong that 77.80 to 78.50 zone is, and you can see by the wicks that we've got there, a couple of quite large ones, that it has had a serious crack to try and get underneath it, but it has pulled up every single time. The problem for oil is it is still in a bull zone. There's no question about that, but the problem that oil has got now is that the 20 moving average is bearing down on it. And every time it fails to make a new high, which it seems to be doing on the regular here right now, it's actually weakening that support. That support is it's under attack, basically. Okay, so every time it gets a lower high and it hits the support again, it's like you could just imagine it being under attack and getting squeezed by a 20 moving average and, pressure momentum building to the downside. So it would want to get up and going fairly soon, would be my take on oil. It needs to get up above that 20 moving average. Most importantly, it needs to get up above $80 effectively. It needs to get up and a daily close above $80 before we start taking it seriously again. It can hover here for a long time, though. If you look to the left of the chart, you'll see that it had basically about four weeks nearly, probably a bit longer, of action right at this level. So it's an extraordinarily important level. There's no question about that. But, there is an argument there that there is a super head and shoulders there as well. That, if this level should break, a $72 target could be well and truly in place. So definitely one to watch is a head and shoulders inside of head and shoulders. We've already traded the first one, and the take profit is actually right where we are now. But when you look at the bigger one, there is a bigger pattern here at play. So it's not there yet, but by golly, it wouldn't want to be closing at $76 on the daily. Let's just say that.
Yeah, I'm torn on this one. I loved 78. We absolutely smashed the level. I mean, the thing is that as a trader and investor, you should be incredibly excited if you pick a zone, that zone is reacted to, that zone is therefore built into either an accumulation or a distribution. I find that exciting, even if you haven't even made a cent yet. Now, you might say, are you mad? Are you crazy? Well, maybe. But the thing is, what I like to see is I like to see reaction. Now, obviously, I think of this as a moving kind of psychology, thing. It's a flowing, moving entity in many ways. So if you can start to pick where that entity is going towards, and I like in the market is moving towards structure zone to structure zone or equilibrium to equilibrium, then that's pretty cool. So to see these wicks, that's a great sign, showing that there's bulls there. But as Ty said, the 20 moving average keeps going down. We have to admit that we are in a downward trend on higher timeframes at the moment. And we haven't seen this market want to get through that 20. And that's that final component. This is where we had the res. We got through for a second, couldn't stick it. So we couldn't hold the close, which is always important. And therefore, we can't move to the next level, which is going to be around that 84, 83.50. So at the moment, yes, we've got wicks. That's cool. But if this ends up with a big, dirty red candle over the next 24 hours, I don't see why this isn't going to 72. So I've gone from being, very comfortable with the idea that 78 was a pretty good zone to really questioning it. And you might say, well, that means that you made a mistake. I would say no. Instead, what I've done is I'm reacting. I patiently entered the perfect zone. In fact, it's right where we are. But I am degrading that position because I'm seeing the information, seeing the storyline come through. And I'm saying, you know what? Okay, I understand this is still a good level. But if it doesn't get above here, I don't want to rescale more position. So instead, I'm going to descale and wait for the next information. And I think that's the evolution of a trader. I don't know if you guys agree in the chat, but let us know. To me, that's a epiphany moment that's very, very important in trading. So very good zone. Obviously, we're seeing weak rejections, but until it's above this 80 and closing, we can't really be sure the momentum of the bull is back in play. So I say important next couple of day trades. Like, how is this close going to be?
Very important close for it.
Yeah. All right, another one here, Ty. That's the time frame thing. How can we use volume footprint recently introduced on the TradingView platform? That's correct, with Pepperstone and TradingView that you are using now. So I didn't have it on there before. Now I like the idea of the volume footprint. Maybe we'll do a video on that. It's a little buggy, I've noticed, because I have been testing it and it broke on me before. So maybe we'll do that next week. Would you guys like that in the chat? Let us know. Give it a thumbs up if you want that to see that type of thing. But yeah, volume footprint, we can do some analysis on it. Do know this though, you have to use, I believe, Premium TradingView to get access to that particular one. So just keep that in mind. All right, Ty, let's go over to your trade of the week, Aussie 200. What are your thoughts here?
I like what I see on the Aussie 200 because it is mimicking effectively what the US is doing. Of course, we know we're following the US markets quite closely, but yeah, that said, we've got some dividends coming out from some banks shortly. 3 of the majors, they only make up a small part of the top 20, but they're a significant part nonetheless. Artificially weakens the index, as we know. It's at a very, very heavy level of resistance. Now, look, if you take this out to a weekly chart, it's going to look like a double top. We'll go to a weekly chart, and it is starting to look like a double top. Okay, and if you look at the MACD on that particular one, I'm just going to bring it up on my screen as well, so I can actually talk to it. You'll actually be able to see that we are basically it is class B bearish divergence on a weekly. And realistically, I do like the idea that we're extended away from the 20 moving average. That gives us a really, really good launch pad to potentially take some short opportunities down to around that sort of 76.50, 76.80 area, depending on how quickly it happens. The 20 moving average is sort of sitting around there. I'm not convinced that it's going longer than 7,900. I think that 7,900 is an important zone for it. But this weakness that we're seeing, I think, is a little bit stronger and weaker than the indices that it's actually been following, being the US indices. So look out. Probably the question that I would pose to you is, look out and what will happen to the ASX 200 if the US does pull back a bit. Because if the US pulls back a bit, we're going to pull back a lot in context to what they're doing by probably double the %, I think. So I'm very, very conscious that we are potentially moving towards a 76.50 to 76.80 level if we see a sequence of lower highs and lower lows on one of my favorite time frames, being either the 4-hour or daily. Probably a little bit too slow. You're not going to get that in time. I think by the time it does that, we'll be already there. But definitely on the 4-hour, if we see a break of this little zone here and we roll over with a lightning bolt, I'll be looking for a couple of 100 points on the downside.
Yeah. So also remember the 3 areas of the Australian economy. We've got financials, energy, and of course, metals. Now, we were talking about some exhaustion possibly in copper, gold, silver, possibly it's there. So if that's true, and of course, energy being oil falls through, let's just say it can't hold this exact zone, then all of a sudden that's going to really start to hit into that Australian market being the, I think it's the rule of threes. I know there's other sectors, guys, but any Australian would know what I'm talking about.
Very, very.
All right. Well, let's move over to Nvidia because, of course, it's the discussion of the day leading into earnings. So let's have a look at that one. I think we've got to cover off GameStop as well later on, so we'll get into that. And then Tesla's been asked as a request question. So let's just lightning fire these ones, Ty. First up, Nvidia. Now, no one's really going to like what I have to say about it because in this case, it really is a case of options discussion and earnings itself. I will tell you where I'm seeing their res. So I've got a lot of orders sitting at 1,000. So that's basically a key resistance. And then we have a lot sitting at around 880, interestingly enough. So what that basically means is we're in what we call positive gamma, which basically means that there are an extreme amount of calls coming in on the market. Makes sense. Retail traders like you and I seem to like this type of trade. So it's happening quite a lot. And what I expect is there's a plus minus around 7.5% move according to the options market. Now, Nvidia's style, and I can't share that data with you right now, but Nvidia's style tends to be that every single one of the previous earnings, almost all of the move was just straight away. And it went straight into the res and straight into the support. So I think what's going to happen is the result will come out and just go bang straight into a K or bang straight into the support being around 888. And that makes it incredibly difficult to trade because it's just this done. It's at that zone. And I think sometimes, you might love something. You might say, oh, it's going to be volatile. Look at this. But sometimes it's better just to say, well, investing is different, but maybe it's not worth the trade. I mean, is it worth taking, effectively what is a gamble plus minus 7.5% tie? I think that as traders, we should always be looking for statistical advantage and edge. So to me, no, but some people will. These are the real risks. I feel like it's going to go to one of those levels. And if we actually measure it out, that's going to pretty much hit, close on 5 to the top and on the bottom about 6 and a bit. So you can see where that range is starting to focus.
Yep. One of those
trend
ones I've been leaving right alone. Yeah.
Yeah. I mean, trend's up, maybe a long-term holder, doesn't matter. But as a trader, I prefer to actually react after the news when we see really nice hits to these zones. What do you think in the chat, though? Let us know. And always interested in your opinions. All right, let's move over to the next one. Tesla, quickly. Tesla making some nice moves with some decent little bit of news that came out for it. Though I will say this, Ty, my goodness, Tesla dropped the absolute hammer on prices on cars the other day. As in like a day ago. Oh, EVs are nasty, guys. They can be nasty if you, at the moment, in the price wars that are going on in the world. But anyway, here we have the price market movement. And we moved through 180, and basically it went straight to 185, which is to be expected. Now, this is a very strong close. You can see it closed right on the high. I think it will be affected by Nvidia a little bit, but a lot of signs are pointing towards this thing's going to go and try to test that 200 again. So look, last week was phenomenal. Excellent entry in here, excellent res, excellent break, exactly to 185. 190 also important, and then 200. So basically it goes dirt. Like that's the important factor. And I think when it closes on a high like this, I mean, you've got to like that strength. Your thoughts, Ty, upon seeing this?
No, really, really good bounce off. Yeah, no, we've been watching that in the streams every morning, and a really, really good bounce off that very, very important zone around 170, but also that 20 moving average. It was like a trampoline.
Yeah, really, really crazy strong close. So, and market movement through. Anyway, I just thought it's, I think this is ultimately going to go with the market a little bit, but from the way I see it, it's a close on the high like that usually points to at least a little bit more action moving forward. And you can see even over here with this big close, there was a pullback, but in general, it still made a higher high. So I usually treat closes like that as something good's coming, because you can see here, close strong, doji, equilibrium day, big market move. All right, let's go to the elephant in the room, which is GameStop. Now, GameStop again is analysis of options, really. So as this loads up, I'll have a look at it. There we go.
In the stream, in my morning stream on Tuesday, someone said something that cracked me up, and I know he was only he was being sarcastic, but it did crack me up because he asked about some analysis on GameStop, and I said there's no technical analysis that you can do on this stock right now. But he did say that, but look, it landed on the 20 moving average and closed above it, and that really made me laugh.
Right. Yeah, take that, Ty.
It did really crack me up, and it gave us a good laugh.
Yeah, well, there you go. See, so it's on the 20 moving average, guys. But no, look, one of the things I noticed about GameStop, and obviously it's down here in the morning, is that it keeps holding the 20. Now, if you actually go and look underlying, what's actually underlying in this stock right now, 20 is a battle zone between options traders, and what that's leading into is, of course, people just keep trying to buy that $20 and defend the stock, the level which has a lot of puts on it. So that's actually acting as wick rejection. So even if you knew nothing about those things, what you're actually seeing here is you're seeing a lot of wick rejections. So these wick rejections are showing you someone's excited about buying $20, basically. You don't want it to close under this level. That would be bad. But as long as it holds here, that is the major support. So is this a gamble? In my opinion, absolutely. I think that you're betting on the power of the internet, I guess you would say. And you can lose a lot because it can move all the way back down to where it started very, very quickly. But $20 is clearly a contentious zone. And I feel like momentum will come back in on this trade if it manages to get back above this high. Your thoughts, Ty? I mean, to me, it's just all about, okay, we're coiling, we break out, momentum comes back, we break down, things go really bad.
It's not a technical analysis trade. This one is a purely a speculative trade on what may or may not happen, I think. So as long as if you are trading it, trade it like a specky stock that we would call a specky stock, where the gains could be quite extraordinary if it does have a bounce up, but you've also got to be prepared to nearly give back everything if it goes back down to its lows. If the 20 gets broken, it could be in all sorts of trouble. So just treat it with caution. And if you want to have, just treat it like a speculative stock. That's effectively what it is.
Yeah, very, very speculative, and you do need to be, on your best behavior when it comes to your risk management there. I guess I'll just finish the show here, Ty, with crypto discussions. So one of the things that I want to mention, well, firstly, Ethereum, obviously the rumors and the concepts of the exchange traded fund pushed this thing really heavily. So you can see how fast it moved. Really strong break. Now, this was going to be one that I would pick the other day just because what we saw, and I did this analysis, is we saw it break this level and the downward trend and then hold. So that was pretty cool. Also, Bitcoin moved through. So we have a look here at Bitcoin. It moved through that all-important 67K. And as soon as that happened, straight into the next level of equilibrium, which was up here at 72. So I think with Bitcoin, the key here, and this is why it's a very interesting trade, is that you can argue that's an inverse head and shoulders. You can actually argue this is a fairly decent pullback capitulation kind of, well, not capitulation, but certainly a decent pullback. Standard for crypto between 15 and 30%. And then if you think about that, it's kind of already predicting that it wants to break to the upside. So what I did before the show was I pulled a couple of fibs, 61.8 fibs, etc., that come into this area here. And I think that, for me, I'm looking for this thing to coil here. And then I think if it coils and breaks out, it could be an explosive move for crypto. And a lot of people are angling for that 100. With a nice consolidation now that's lasted a couple of months, this is a very important time. So it's not really a trade of the week, but what I do think I'm looking for here is the Bitcoin actually starts to create a really nice kind of version like this, but instead of breaking to the downside, it breaks to the upside. And I think that could be an explosive move on the Bitcoin side. So yeah, interesting chart, and certainly looking better post-halving now than it was a week ago.
Brilliant. But I think we've covered everything off tonight. So look, thank you so much for joining us tonight. We've covered a lot. Let's keep an eye on this Nvidia announcement. Let's just see where the markets end up after it. I think trade with caution is probably the key. Guys. Yeah, the key word is definitely there. But looking forward to jumping in next Wednesday again and really having all of the US earnings out of the way then, Tom. So I think we can finally get some real direction on where we're going to be over the coming weeks and months. So look, thank you so much for joining us. Thank you, YouTube, for giving us that one person watching according to your stats. We know there's a lot more than that. But no, we do appreciate your time, of course. And if you have any questions or if there's anything on the show that you would like to see, please let your Pepperstone representative know, because they pass on all the feedback to us, and then we can bring it to you live every Wednesday. So thank you so much for joining us, and we look forward to seeing you all again next week.
Yeah, sign up down below for the Wednesday streams, guys. Give it a thumbs up if you enjoy it and you want to see more of this content. Only through that do we keep bringing this to you. And good luck out there, because remember, plus minus 7.5% might only seem like a little percentage. That's going to be hundreds of billions of dollars, because, of course, Nvidia is not a small company anymore. It's a big one. So expect possibility of fireworks. We'll see you then. We'll leave you with this, and catch you next week.